KPMG released a survey this morning on improving financial performance in 2010 and beyond. Joining us to take us through the results is Tony Vicente. He's partner in KPMG's Financial Management Advisory Services. Tony, thanks very much for coming into the studio. We've hopefully come out of the financial crisis. There is still talk of a double dip, if not a double dip, perhaps slower growth going forward. So it must be important for companies to improve their financial performance where they can in an environment like this.
Well, that was the objective of the survey, is really to understand what are the goals that the companies are setting at this point and the strategies to really move forward and improve their financial performance. So just getting a bit of insight and sharing that, I think, with the market.
So what is the key focus, Tony, at the end of the day, for improving financial performance? What are investors looking out for?
Well, the priority seems to be cost cutting and revenue enhancement. Those are the two big priorities, followed by risk management, really, in essence.
Cost cutting, where are they cutting costs in the right places that they're not going to hamper their growth prospects going forward?
Well, cost cutting is an interesting one because really the last period of economic uncertainty, instead of focusing on operational efficiency and improving the performance of the business through better efficient methods and enhancing the market, etc., the cost cutting has really been more on the soft stuff that really hurts. It's the development of products and it's the training type of element. And we're seeing now a change between that to a more operational effectiveness type of trend where companies would like to grow but really still lack that confidence to invest in the growth, is still looking at themselves internally to see how they can better improve the operating models.
So right now focusing on cost-cutting measures as opposed to CapEx spend going forward. So that seems to be the priority for 2010. Is that what you're saying?
I would rather say that when we ask the companies to rank their priorities in terms of what they're doing to improve financial performance, despite the fact that they basically ranked enhancing the revenue and cost-cutting on an equal par, we see really the initiatives around cost-cutting as sticking out. These are really the priority areas at the moment.
Are many of these costs that are being cut in businesses costs that are simply going to creep back in when they're back on a growth trajectory?
Yes, because interestingly enough, our survey really picked up there's a lot of work to do to still align the operational strategies with these goals that they've set for themselves. So interestingly enough, 87% only of the respondents actually set targets for their cost cutting, which means that there's a small likelihood of actually achieving those type of objectives. We've also picked up that in South Africa, compared to international, our ability to actually achieve these targets is quite low.
Looking at finance teams' budgeting skills, apparently this has also been one of the key elements in terms of what companies have been looking at, that perhaps there's still a lot of work that needs to be done.
That was very interesting. Almost 50% of the respondents said they were not happy with the budgeting processes in place at the moment. I think this is indicative of also where we are. Businesses have a lot more uncertainty today than they had before, and budgets have a completely different focus. Business intelligence, interestingly enough, or rather a need for information, it really is the key trend right across the lenses that we applied in looking at how companies are looking at improving their financial performance.
What are some of the barriers South African businesses faced to the implementation of these cost-cutting exercise and to growing their businesses going forward?
It is, again, funny enough, without clear goals, things don't seem to materialize. But really, it's the people element. Cost-cutting for the sake of cost-cutting doesn't really get businesses to where they want to go. You really got to change the culture. You really got to understand what are the operational benefits and incentivize that inside a business. Now, the reality coming out is that the structures that the companies have adopted are not really being looked at. So it's really on the soft side that are cutting costs, rather than delving into the business saying operational structures are not conducive to really effective cost cutting that doesn't bounce back in the short term.
Tony, it's no secret here in South Africa, productivity has been top of the agenda for some time now. Wage negotiations becoming even more aggressive when it comes to the public sector. What do companies have to say about productivity levels right now in South Africa? Did that come through as one of the key elements as well?
Interestingly enough, again, the revenue enhancement was low on the rank of priorities in terms of how they want to improve their financial performance. It's really around the cost-cutting side, risk management, investing in business intelligence, understanding better what their business are doing before making decisions. And this was the interesting part for us. I think despite the fact we talk about growth, and we want growth, and it is important to note at least 50% of the respondents are still growing. So there is a positive sign here. But they're not focusing on those areas of the business. They're really focusing on the quick cuts to the bottom line.
How does the South African survey vary from the international survey from global counterparts? Are they looking at the same priorities? Do they face the same pitfalls as South African companies?
Yes, very much. We did, where possible, compare trends with international. What we're seeing is that we are not as good as the international players, perhaps, in achieving some of these short-term measures. Their outlook is a lot poorer, I think, than is ours. The respondents were generally very optimistic about the way forward, with the majority saying they will be growing in the near future. So there's still that middle ground that we face as compared to Europe, which has got a medium-term negative outlook.